Silver is extremely volatile. We've seen a tremendous increase from the 25, 30 US dollar level up to 120. Now we're back at 60. And just as we speak today, Iran and the US are back in the war and silver goes down below the 60 US dollar level. And I can hear already in my head a lot of questions. Where are we heading? Is that the end of the silver bull run? Or is it just a little bit of a bigger correction in the middle of a bull run? And today I'm here with Peter Krauth, an absolute silver expert and insider who lives in Canada, talks to mining companies even more than we do. And I'm very pleased to talk with Peter today about where are we at in the silver run? Is this the end or is it just the beginning? Can we still make money with mining stocks, or is that also something we should rather short than go long in? And first of all, Peter, thank you for your time. I'm looking forward to our conversation here.
Well, so am I, Jan. Thank you so much for having me once again.
So, Peter, obviously we could bring a lot of reason why silver was down or up, but the main question, I start with it in the beginning, is, are we selling or buying now?
Well, I can tell you what I'm doing, and I'm buying, and I've been buying pretty aggressively, actually, just in the last few days. I just feel like having watched these markets for such a long time, yes, nobody knows the future. I cannot tell you that silver cannot or will not go lower. But given the significant correction, I'm talking, it's clearly been a 50% correction from that peak in late January, around $121, I believe. So almost exactly 50%. These are typical, frankly, and it had gotten ahead of itself. But at 50%, I believe most of the downside is gone at this point. Perhaps we will test something like $55 or so. But as I say, I've been buying aggressively in the last few days. I just think that, my downside's very limited, and I am doing so in what we call buying in tranches. This is something that I talk about in my book, I talk about in my newsletter, and that way we can perhaps straddle, buy across a bottom. In other words, we can't. It's only the luck. The luckiest person will have the chance to pick the absolute bottom. But I think that the smart investor looks to layer in across the bottom, and so this is what I've been trying to do. And I think that even as I say, if it goes a little bit lower at this point, it doesn't concern me. I think that if I look out 6 months, 12 months, a couple of years, I think that even having bought slightly above the perhaps a near-term bottom will work out very, very well. Not concerned in the least.
Okay, that's very good to hear. And I guess I can imagine the next answer already, but I'm not sure if you have that in Canada as well. You probably have some YouTubers that are looking at charts and doing their technical setups. And we have some people that are doing Elliott wave theory, as they call, and they are pretty big, spread around Germany and YouTube. And some of them have been talking about gold is going back to, what was it, 1,500? Silver will go back to $13, I believe. What is your comment on that? I mean, I made my comment already in a different video, but what is your take?
So I'll repeat what I said earlier. No one knows the future, and I will not, let's say anything is off the table. My personal view is I think the odds of that are extremely low. Just given the amount of, if we talk about gold for a moment, the amount of buying that there has been, it's been tremendous. And in fact, I just saw some numbers this morning from the World Gold Council, and central banks have been net buyers again in the second quarter of this year. It's just been tremendous. The U.S. is running a deficit of something like $2 trillion a year. They are now spending, I believe it's more on interest payments than they are on their next biggest expenses, things like defense and social security and health and so on, and rates are going up. So this makes their lives much, much more complicated. That's something perhaps we could talk about as well, how they may deal with that, which is very bullish for precious metals. But rates are going up. meaning that that just makes the debt and the deficit more challenging, more expensive, meaning they will have to print even more. So one way or another, inflation is high, will stay elevated, and they simply cannot raise rates with a debt and deficit that are so high. So inflation stays elevated, rates cannot be raised significantly. So what you have is a situation where inflation will be allowed to run. I'm not going to say rampant, but it'll be allowed to run, and that's a perfect environment for the precious metal space. And that's why I certainly cannot see in a realistic way, $1,300 or $1,500 gold, $13 silver. That would take us back to 2015. I remember very clearly. Oh no, it was 1,000. Sorry, it was below that. It was 1,050 back in December of 2015, and I believe that was the secular, perhaps not on a time frame, but in terms of price, I think that was the secular low for an approximately 50% correction, because in September of 2011, I believe, gold had reached 1,900, and then by 2015 in December, it had reached almost half of that, 1,050. That marked the bottom. We've not looked back. I certainly don't see us going anywhere close to that, probably ever again.
No, I would agree. That would be, for me, that's totally off the table, to be honest,
Right.
that we go back to $1,000. Even if I just think of, we all can buy jewelry or whatsoever in gold, and that still has value, right? I mean, talking about
Exactly.
gold will be meaningless in the future. For me, that's somehow something that doesn't add up with the reality. But we will see. Peter, my next question obviously is, we talked about silver, we talked about gold. Let's talk about mining stocks, that even more exciting. Can we still make money with mining stocks, or is that off the table? Let's talk about this a little bit more.
Yeah, so that is something that is totally on the table, because I mean that's what I spend my days doing, looking at mining stocks, silver stocks specifically. That is my complete focus, and so obviously silver itself, but more broadly silver stocks, and that's what the newsletter is for. We are the only ones who do silver only newsletter, silver mining only newsletter, and I've been doing in this space for over 20 years. I have to say that it is hard for the outlook to be more compelling than it is right now. I was at a conference back in January. This was probably 2 days before the peak in the silver price at 120. And that same day at the same conference, Rick Rule went up before me, and I was in the room. I was listening to his presentation, and he basically said, he shocked the room and he said, "I'm selling my silver." But then his next words were, "Because I'm going to use the proceeds to buy silver stocks." So when I went up a little bit later that same day, I said, I thanked Rick. I said, you basically laid the groundwork for me. He made my case, which was that this is now when silver stocks will start to outperform. I had also said that we should expect a big correction at that point. I said it could come any day. And to be fair, it happened within a couple of days after that, and when silver went down something like 40% in a matter of about a week or so. But the setup in silver stocks was tremendous, and as I say, nobody else does this. We've now been collaborating for the last several months. Myself with you and your group at Axino. You now publish Silver Investor in German. And the arguments from Rick, which are the same as I had, I didn't know what Rick's notes looked like, so it's interesting that we had come to the same conclusion. Was that the setup was fantastic, because if you just look back at what a year or a little over a year ago or so ago, we had not yet had this. This was middle summer of 2024. We had not yet had this tremendous run up in silver prices, and analysts were using maybe $30, $40 to model, pricing for producers, or perhaps even for explorers or developers. Now they're using more like $50 to $60. So their models have nearly doubled their silver price assumptions, which which means that, if you project out, none of this, in fact, I've read research in the last couple of weeks that shows that none of this really has been priced in yet. It typically takes 2, 3, 4 quarters before the market starts to believe. In fact, even some of the mining executives themselves start to, because they can be pretty conservative, until they start to price in these much higher silver price assumptions. And so when the analysts do start to price them in and the market catches on and says, oh, wow, so that means that these record profits that you've had for the last 1 quarter, the last 2 quarters, we can expect these to continue for at least the next couple of years. That means cash flow projections are just simply off the charts. And as I say, this has not been priced in. Everybody's focusing on NVIDIA, everybody's focusing on the Mag 7, and yet they are now starting to look like what the mining stocks looked like in the last cycle or whatever, when they've been issuing tons of shares instead of being cash flow machines. They've reversed roles, basically. They've started issuing equity rather than being able to use their cash flow or using their cash flow. They're now raising tons of equity to raise money to be able to go out and build a huge AI infrastructure. And now the reverse has been happening for the mining industry. There was a fantastic chart by someone you and likely many of your viewers know, Tavi Costa. I follow him closely, and he had a chart that showed, and this is a year ago, in fact, a chart that showed all the different subsectors of the S&P. And he had, I believe it was like the top largest 20 gold and silver miners was a subcategory. And he compared them to the healthcare sector, to the technology sector, to utilities and so on. So the most cash flow positive sector, the highest profitable sector was tech at 17%. The large gold and metals miners were coming in at 31% cash flow margins. I mean, nearly double what the next highest sector was. I mean, at this point, they are, as I say, true cash flow machines. The market has not priced this in yet. All we need is a topping in the market, in the general markets. And it doesn't have to be a crash. It just means it'll take a little bit longer. But if people, investors, general investors, starts to see that stocks globally, especially the tech sector, have peaked, and then you get several months of gradual downward trending. At some point, the smart money will be first. Will start to rotate into mining, but the generalist investors, the retail investors, will start to catch on. We have that opportunity now to be in way before them and to ultimately take profits when they decide that they think it's a place for them to be invested and sell to them.
Yeah, no, that's a very good point. And I think you made also a very good point, Peter, when it comes to what are the big Mag 7s and whatsoever doing and issuing equity whatsoever. When we talk about mining, we always talk about the cycles, and we always say, well, we're coming close to a top of a cycle when the big mining companies are making very stupid decisions, let's call it like this, buying way too expensive projects, issuing way too many shares, and spend way too much money on everything, doing big parties, big lunches, best wine, whatsoever, doing big events. And I think, Peter, when we just look back at PDAC, where we met, and we have been at a very good high level in silver, still $90, I believe, at that day, and still gold at 5,100. I mean, it was not even a big party. It was the same thing than every year, right? It was a little bit better, but it was not like the biggest thing we've ever seen. And we see the opposite with the Mag 7 whatsoever. They spend extreme amount of money. We are still very conservative in our industry, and I think that's a very good indicator to look for.
I'd like to share a little anecdote because you brought up PDAC. So this is for your viewers. That's the world's largest mining investment conference or mining conference, which takes place in Toronto and usually in March every year. And so we met there again. And in fact, one of the events that you and I were both at, someone came over to me and said, "Peter, come. I want you to meet this guy. I want you to talk to this guy." And I I said, okay, let's go talk to him. And it turns out it was someone who worked for one of Canada's largest hedge funds.
Mhm.
And he said to me, he said, I've been watching what's been happening. So, for a little bit of context, this was early March. Silver and gold had peaked in end of January, early February, so we were only a month from that. But they had seen how both the metals and the mining stocks had exploded higher. Over that year prior, and there's a lot of gas left in the tank, to be fair. But and so they were still cheap even at that point. We could argue about that, but some of the stocks had been up 5 times, 8 times, 10 times in that time frame. And what he said to me was very revealing. He said, we have been around for about 30 years. We are not in this space whatsoever. We don't feel we have the expertise for it, but we know we need to be here. We know we need to be in mining now. He said, I am going to drag my boss's butt down here tomorrow, tomorrow morning, and I'm going to get him on the floor of the PDAC mining conference to see exactly what's going on, because we have to get into this space. He said, we have about $500 million that we have available to allocate to mining. And we don't have the expertise for it. He said, he started to ask me, he said, do you know of investment teams, analysts, managers an entire team that we could go out and buy, just buy an entire team who could manage this for us and start allocating the capital to this space. So Jan, think about it. This is supposed to be the smart money. I'll give them credit. They're smart enough to know that they don't know the space well enough. They're also smart enough to know that they need to get into this space, but they haven't been smart enough to get in early on in the stealth phase when the easiest money in a sense is made, because the wider investing public doesn't realize just how good the values are. And we're still early in this cycle. I think that that shouldn't scare or concern anyone. In fact, what we have now is an even better opportunity, because we've seen this early run up. We've seen a significant correction. None of the fundamentals have gone away. I was at a lunch just a couple of days ago with, I don't know if some of your followers know Michael Gentile.
Yeah.
He's a well-known name in the junior mining space, very active, very personally invested, in the largest investor in a few dozen junior mining companies. And he said none of the fundamentals have changed. He says, I look at the inflation outlook, I look at the deficit outlook especially for the developed nations around the world. He says, my thesis has not changed at all. And I ask myself that every day. And given that, all that means in terms of where mining stocks have been perhaps in the last, say, 3 to 4 months is that I have a fantastic buying opportunity. And so I totally agree with that. That's how I'm positioning myself. That's what I'm telling my subscribers in the newsletter. And that's what I'm doing. And as I said early on in the interview, that's what I'm doing, especially in the last few days. I think that the setup is ideal.
That sounds very good, and I think we are pretty much on the same page, Peter. And also, thank you for taking us to the PDAC time when you talk to that hedge funds manager, because I think that's very important to understand when we talk about fund managers in general. Most of them are very good in what they are doing in their particular topic, but that doesn't mean they understand cycles or markets in general,
Right.
or have like a general view. They are pretty good when they invest in tech stocks to evaluate a tech stock, but not to go into mining or to look for different opportunities. And I think here's the very big opportunity for all the listeners in the future. Peter, one of my next questions, or my last question on my note here, would have been, what signals are you watching in terms of buying silver or mining stock right now? But I mean, you said you're buying already. So is that your signal here?
So yes, I mean, my signal is when I see I'm not a big technical analyst. I do believe that it has some value, and I'm even, I'm going to say, without naming names, some very high-profile investors will, on the one hand, sometimes discount technicals, and yet. And other times they'll turn around and they'll say, well, they are important and they're valuable because so many people follow them. And I would at the very least agree with that part of it. Many people do follow them, so they have some influence. And I think that if you look at momentum and if you look at averages, price averages, 200-day averages, 50-day moving averages, and so on. Gold and silver are positioned well. I think at this point, those are long-term trend prices, and both metals are positioned well. I think testing these levels, and if you look at, for example, momentum through things like the RSI, which gives you an indication of how much buying and how the price is behaving relative to the sector overall, it's very positive. You can look at things like how the silver stocks are moving relative to the silver price. And in the last couple of weeks, we've started to see a gradual outperformance. So, and by the way, if you look at the last couple of years, and that's why I was so bullish, even especially on the stocks back in January, and even as things had run up tremendously, I said, what we've seen has been a huge run up in the silver price. The stocks have lagged. That is not only is it, don't want to say it's not normal, because in some ways it is normal. However, it's also indicative of the potential, because after underperforming, they tend to outperform. And so if you're going to invest in mining stocks, which is already, more volatile and higher risk than the metal itself, you want to be rewarded for it. And so you need to get leverage. And that typical leverage is 2 times, 3 times the silver price. Up until January, we had, I'm going to say, over the 2 previous years, we had negative leverage. Over the prior year, we were flat, so we had 0 leverage. So people were not, relative to silver in that time frame, being paid for the risk that they were taking on. Now I think that the tables have reversed. And if you look at silver stocks relative to the silver price, they've gradually started to outpace. And this is one of my biggest indicators, which I've talked about in the newsletter, in fact, in the recent weeks. That's been one of my triggers, so to speak, for it being time to start layering in and buying in the sector. There are multiple indicators. As I say, we've talked about a few of them, but that certainly is when we start to see the stocks gradually outperform the metal. It's a place that you want to pay a lot more attention.
It's a place to be, probably, and if people want to follow and see what are the silver stocks that Peter is buying so aggressively, they can actually do that. You can go to stocks2perform.de and buy the German version of Peter's stocks letter. You can also buy his English version if you prefer that. Always depends on your language. Peter, thank you so much for your time. I'm really looking forward to how this bull market turns out. We are always talking about being patient and look for the long term. We said it 2 or 3 years ago when nobody was believing in silver. Now again, nobody believes in silver. So I'm really excited to see how everything develops. Thanks for your time and thanks for your information. Looking forward to catch up again.
Thank you, Jan. Always a pleasure, and I look forward to it as well.